Our next guest is a derivatives expert, an economist, an author, and he also appeared in the 2010 Oscar-winning documentary Inside Job. Joining us today on the line is Das. Thank you so much for being with us to talk gold and your latest book, The Age of Stagnation.
Good morning. Good night, wherever you are.
Well, we're in New York, and we got our hands on your latest book, The Age of Stagnation, Why Perpetual Growth is Unattainable and the Global Economy is in Peril. So not a rosy picture of the economy here, Das. What's your outlook here?
Well, look, I think when I started to say about 2012, 2013, that the central bank policies and the government policies weren't working, we weren't going to have growth, we weren't going to have inflation, everybody thought I was a village idiot. The problem is, most of that is starting to come true. And if anybody thinks that we're going to get back to the lovely days of pre-2007, pre-2000, I think whatever they're smoking, I'd like to have some. And essentially, we've got an absolute range of factors, ranging from more debt than any honest man or woman or country can ever pay back, to essentially resource constraints. We have problems with the environment. We have problems with an aging population. The emerging markets are blowing up. Geopolitical stresses are everywhere. Other than that, things are going along really well.
All right, well, let me narrow you in here. Last week, Fed Chair Yellen said in her testimony before Congress that economic growth does not die of old age. How does that fit in with your expectations?
Well, I think she and the other central bankers will die of old age before we get growth back. Because basically what they're doing is doing little rain dances at the moment. Now, look, the reality is they've pumped $12 trillion into the global economy. We have interest rates which have gone to zero, have gone to negative. Governments have run up massive amounts of debt. And somewhat 7 years into this process, growth hasn't come back. And even one central banker, Mervyn King, who's used to be the governor of the Bank of England, said, you know, we've been putting all this money into the economy and it doesn't seem more is the right answer. I don't think this is going to work because until you change certain things, which is write off half the debt, which is not going to be acceptable because the people who lent the money are going to lose their shirts, you're not going to get growth back. And we have other issues like slowing productivity and slowing rates of innovation. So it's not going to be that easy. And I think central bankers have assumptions that they have control over the economy. I'll give you an example. The Japanese central bank cuts rates to negative to weaken the yen and prompt growth. Japan's actually slowing and the yen's actually rising. So you go figure.
Well, in your book, in the economic environment you describe in your book, gold tends to perform well as investors seek safe haven. Does that mean you're bullish on gold?
Well, I think fundamentally, everybody always recognizes that gold is a part of an investment strategy, which tends to do well when everything else is turning into something which the French might call merde. But basically, under those circumstances, you also got to balance certain other things. And one of the issues is just simple supply and demand. Gold supply has actually contracted somewhat, and demand has been reasonably stable. And one of the things to look forward going in the next year or so is there's a number of countries like, for instance, Brazil, Russia, China, etc., who are big holders of gold, and they have financial difficulties. So the question is whether or not they start to liquidate or find it attractive to liquidate gold. And the other interesting thing is China's been a big buyer of gold, but their foreign exchange reserves have fallen by about $800 million. So are they going to buy gold? The other thing to take into mind when you look at gold, I think, is gold generally does well when the US dollar is weak. It does well when interest rates, that's real interest rates, are actually negative, and when you have inflation. Now, the problem is you don't have those three things. The dollar is looking a little bit stronger, though it's come off a little in recent times. And we now have negative interest rates, and the chances are we are certainly not going to have strong inflation. We're probably going to have deflation. Under those circumstances, you've got to balance those two. So essentially, we're going to see this Titanic battle going on between these two forces, and we'll have to see what happens.
As always, really good thoughts from you, Das, and I urge everyone to get a copy of your book. Thanks so much for joining us.
It's my pleasure to talk to you again.
And thanks for watching this edition of Kitco's Gold Report. We'll be back tomorrow.